Bengaluru-based precision component maker Sansera Engineering is coming out with an IPO to raise about rupees 1283 crore. The shares are being offered in the price band of rupees 734 to 744. The issue is entirely an offer for sale. 35% of the issue is reserved for retail. About Sansera Engineering, it was incorporated in 1981. It's an engineering-led integrated manufacturer of complex and critical precision engineering components and started mainly with the automotive sector. Now it has also forayed into non-automotive sector. The company manufactures precision forged and machined components for two-wheelers, passenger vehicles, and commercial vehicle verticals. In the non-automotive sector, it has uh, extended its range to aerospace, off-road vehicles, agriculture, and even defense. For the year 2021, it derived 88.45% of its revenue from the automotive sector. Sansera's clients include 9 of the country's top 10 two-wheeler OEMs. This includes Bajaj, Honda, Hero, TVS, Royal Enfield, etc. Bajaj is its largest customer. Sansera commenced supplies to an Indian two-wheeler electric scooter startup in August 2021. In passenger vehicles, Maruti is its key customer. Sansera will supply critical hybrid components to a Japanese OEM. Globally, its customers include 6 out of the top 10 global light vehicle OEMs and 3 of the top 10 global MH. If we have a look at financials, on the revenue front, Sansera has not done very well. This is basically due to a slowdown in automobile sector demand. On profit front, the performance is better. EBITDA margins are at about 19%, and there has been a growth in net profit also. The shares are being offered at a PE ratio of 35, which is middle of the road. Sansera has consistently focused on customer and product addition. It has added new customers and new products. 21 new customers were added from 2014 to 2018. It sold components across 69 product families in the year 2021, which was 51 during 2019. It is now increasing efforts on non-automotive segment. It has pipeline of products under development, which includes components for defense sector and performance bicycles. If we compare with peers, Sansera's turnover is small compared to larger players, but its profitability is okay, and the valuations are just in the middle. Risks at the present, most of the products like connecting rods are used in internal combustion engines. With preponderance of EVs in future, there could be some disruption, and Sansera faces some challenges on this front. The offer is entirely an offer for sale, and the promoter's holding post the issue is at 36%. However, one should consider the fact that Sansera's promoters are first generation entrepreneurs, and so much money may not be available with them to have high stake. Salient points. Sansera earlier made an attempt to go public in 2018, but did not do so due to market conditions. Company overall has a diversified revenue base if we see its products, customers, and geographical spread. It has decreased its dependence on two-wheelers from 65% in 2014 to 50% now. 68% of its revenues are derived from India, and remaining are from exports to developed markets like Europe and United. As Sansera is a technological driven company, it enables the company to roll out new products in a timely manner and cater to new needs for high-end performance. Sansera intends to graduate to designing more complex components, sub-assemblies, and moving up the value chain. Sansera supplies most products directly to OEMs in finished form, that is machined and post components, which result in good value addition. Its EBITDA grew 23% in FY21 to rupees 295 crores, resulting in a 19% margin. Profit after tax also showed a good trend. The debt equity ratio of the company has reduced to 0.55 from 0.64 a year ago. It has AA minus credit rating from Indian Rating. Its overall performance in terms of revenue has not been impressive due to slowdown in the automotive sector demand. And in fact, it has shown a negative growth of 2%. Now to apply or not, despite some concerns, I intend to apply. May give listing gains, but some small downside is also possible. Also, listing gains won't be very high. Valuation is not cheap, but is middle of the road. Company has good margins, diversified product, client base. Present product mix of the company faces headwinds as it mainly supplies components which are linked with internal combustion engines, and there is a shift towards electrical vehicles. However, company is making efforts to bring in new products for EVs, hybrid parts, as well as it is foraying into other sectors. One willing to take some risks can apply. Thoughts on listings. Listing price is determined by variety of forces and depends a lot on market conditions at that point of time. For example, Craftsman Automation, which is not an exact peer, but is a precision engineering company and also supplies to automotive sector, saw a very muted listing, but recovered subsequently on robust operational performance. This is just an example, and Craftsman Automation had very good parameters, financial parameters, and this is not the case with Sansera. Present GMP is low, which points to a very muted listing, or even it can end up in negative territory. I am not expecting much surprise in listing of Sansera due to lower speculative activity. If listing is above IPO price, I may sell the share, and if it is below, I will hold the scrip for some. Thanks.